RNZ National, time for our fortnightly money chat. Personal finance expert Mary Holm is in. We cover all sorts of topics from KiwiSaver to house hunting to investments. Today, though, insurance, and this is something that almost everyone listening will have to make some decisions around, Mary. I was pretty late. Afternoon, by the way. Nice to see you.
Yes, afternoon, Jesse.
I was really late to insurance because I've got to say my dad always said to me, insurance is overrated. So, if something happens, you'll find a way to make it work. And that's kind of how I grew up thinking that way. I got married and my wife was like, let's have another chat about that. Particularly when you have children,
And if a big bad thing happens, like a parent dies when the kids are little or a house burns down, that's a bit hard to just get over.
It is.
Yeah.
It's a classic Nick Mulligan philosophy in the world, which have done me very well, by the way, my father's advice over the years. But let's consider another view on insurance. And we got a listener email that says, Dear Mary, I look at my bank statement and so much of what I see going out is insurance. We have life insurance, 2 policies, vehicle insurance, 2 vehicles, contents insurance, medical insurance, 2 policies, and pet insurance, 2 policies. And this doesn't include insurance in our home, which we pay through a body corporate. It's a lot of money, and the premiums just keep increasing. I wonder if it would be better to put money into a savings account for emergencies, and then we would be earning a little interest on it. That's an interesting idea. How do we, as a family, figure out the best balance for us of insurance versus putting money into savings or paying more off the mortgage? Great letter.
Yes, it is. And, I get a few letters along these lines every now and then, people pondering and considering doing what's called self-insurance, where you just park the money in your own bank account and instead of paying a premium and use that to cover things when they go wrong. The main problem with it is that if you have a big loss early on, you start this plan and you're putting $100 a month or something into an account and then your house burns down or whatever. Yeah. It doesn't really work for people always. Sometimes it does. And I've had people say to me, I've been doing this for 30 years and now I've got all this money in the bank. And for that person, it did work. Yeah, but it's
but
just...
that's the point of insurance, is that it's risk, right?
Yeah, yes.
It's a way of managing risk and doing away with risk. And if you do it that way you're talking about, that is a risk. That something will happen
it's a
early.
big risk. And even if nothing does happen, there's that uneasy feeling, the insecurity of knowing that if it did happen, you wouldn't be able to cover it. So I don't recommend doing that, but I do recommend, and I'll talk a bit more on it in a minute, increasing excesses and so on, so that you insure only for the bigger problems and use that. Therefore, you pay lower premiums and use that extra money to set up an emergency account to cover the small things. So in a small way, you self-insure, but for the big stuff, you get cover.
Yeah.
Is how
that's the approach I take to health insurance, and it does sting a bit when I got my wisdom tooth out earlier this year and the excess wasn't enough to cover it. I was like, no, maybe I should have had a smaller excess. But that's only once every 5 or 6 years.
That's right.
In general, you just wear it. If something happens, you wear the first $1,000 or whatever it is.
Yeah, indeed. And I always think, okay, I don't have to go to the hassle of claiming, which I know is a bit silly, but if it's just a fairly small amount, it can be quite a hassle to claim. And you just say, I'm covering this myself, and it's nice and simple. And but an interesting thing about the attitudes to insurance, I maintain that it's good if you feel ripped off by insurance. If towards the end of your life you say, oh God, I've paid a lot in and haven't got much back. Because that means you haven't made a lot of claims. The winners are the ones who have made a lot of claims. And do you really want to be? Because always when you make a claim, there's also a loss that's not just financial. I mean, even if it's just damage to your house.
I crashed my car.
Yes.
Finally, all that car insurance is going to pay off. It doesn't really work like that, does it?
No, it doesn't really, no. And I mean, even if it's just like some damage to your house, fairly minor damage to your house, trees falling on one room or something, you've still got the hassle of living with it while it's being repaired, etc. So
I don't think many people are pleased the life insurance policy paid off.
the odd widower might be sometimes, but we better not go there. But then another way of thinking about it is that you're spreading the bad stuff across a whole lot of people, so that here's you and there's 100 people and they're all got insurance and one of them claims. And that's a kind of... And I'm sure that's how insurance would have started, and settlements or suburbs or whatever, people would have got together and said, if we all put some money in, then when something goes wrong for one of us, we're all supporting that person. Or you could look at it as spreading the bad stuff across your own life too, that you're paying premiums every month and most of the time nothing happens, and every now and then a bad thing does happen and it means you haven't got a big lump sum problem at one time. So there's sort of different attitudes you can take.
Talking about how insurance started, by the way, I read a big book about Rome, and they were talking about fire insurance. One guy had the idea of starting a fire brigade, and they would sell insurance to people whose house was on fire when they showed up.
What?
So that person didn't have much choice but to pay the insurance, and then they get the house fire put out
my
by
goodness.
the fire brigade.
Yes. That sounds tricky. But I'm not quite sure how that would work though, because anyway.
I think they were quite exorbitant insurance policies.
Oh yes, I think they must have been. Yes, about the cost of the price of fixing the house. Yeah. But looking at different types of insurance, just briefly, with life insurance, and people say, the experts say we're rather underinsured in New Zealand, or more correctly, the wrong people have life insurance quite often. So you've really got to ask the question of what if you do die soon? Who's going to need financial help? Hopefully you'll have people who will care about you dying, but financially, so for example, older people quite often have the insurance when they've actually got enough savings. By then, so that if it was an older couple, and one of them dies, the other one's got enough savings that they don't actually need life insurance anymore. But quite often people with a non-working parent, they don't insure that person. They insure the breadwinner person, but not the other one. And that's not wise either, because if that person died, the one who's not earning money, I shouldn't say non-working, but not earning money. I know what you mean. Then the other person might well need to hire people for childcare and cleaning the house and all these other things. Very useful to have.
You will suddenly
money.
work out how much work that person actually does.
Yes, that's right, which could be a lot. Get term insurance, which means it only lasts for a specific period, because then you can stop it when you haven't got dependents anymore, or when the mortgage is paid off, or whatever.
Can't you just cut it off at that point, or does term insurance have an actual date that automatically kicks in?
To be honest, I'm not an expert on that, but I think rather than getting a whole of life policy which sort of goes on until when you don't need it anymore often. Income protection or disability insurance is where New Zealanders really are not doing this apparently in a big way. We don't like to think about it, but usually what it covers is if you're unable to work for 1 month, or it could be 3 months or a certain period, then payments kick in.
I've actually got a friend who sells insurance, and he was telling me about it. I was having dinner with him the other night, and he was talking about this. He said, actually, it's much more likely for you that this will happen to you, that you'll be unable to work, than that you will die.
Yes.
And the life insurance will kick in. So maybe think about a little less life insurance and a bit more of this income protection insurance.
Yes, indeed. I mean, and if you've got a fatal illness, you're quite likely to have a period where you're unable to work before you die anyway, that might go on for years, and good to have some money coming in during that period.
I think some life insurance might pay out early if that's the case. Does that ring a bell for you?
Yes, I think you're right. So you could look at that. Yeah, I think that is right.
But certainly while you were fighting the disease and when it wasn't clear whether you were going to die or not, you could use some support.
Yeah, indeed. Sometimes they give payments for a fixed period, or sometimes it's right through until 65 when New Zealand Super kicks in. So that's one for people to really think about, whether they've got that sort of cover. Even if you don't, can't afford to get a huge big policy, even if you had, $1,000 a month coming in or something, it would still be a lot better than nothing. Yeah. House and contents insurance, that's all pretty obvious. Renters should also get contents insurance. That can be overlooked sometimes. You know, in a flat, stuff does get stolen, or floods or fires, or all sorts of stuff can go on. Car insurance, that's one that New Zealanders do tend to have more of. They're sort of more aware of that can go wrong. At least get third-party insurance, which means if you accidentally damage someone else's car, you've got cover for that, because that can happen to anybody, even good drivers. Be honest, I've written down in my notes. Car insurance, when people are applying, they ask for your sort of history of crashes and things, and it's tempting to just play it all down a bit. And nothing is said by the insurance company. They don't go in and check your history at that point. But they will if you make a big claim later on. And that's when suddenly you find they say, hey, Jesse, what about this big crash you had 10 years ago?
That wasn't a big crash. It was just a little scratch.
Yes. So, but it really doesn't pay to be dishonest on that. Travel insurance, look, that's... because we're just off on a trip or something, we don't want to put hours into researching it, but I would suggest you go online and look at reviews, because there's a lot of disputes come out of travel insurance. The Financial Services Complaints Limited, which I'm on the board of, Disputes Resolution Ombudsman Scheme, they get a lot of travel insurance complaints. People think they're covered and then something happens and they're not.
Okay, good one.
Yeah, so watch that.
I wonder if that Money Hub website you mentioned a couple of weeks ago might be a good start on that.
It is. Yeah.
It's a not-for-profit, I think. I'm allowed to plug that.
They get some money if you change to a different company and click through their website or something like that, which is a model that a lot use. But to my knowledge, they seem to be pretty neutral.
Yeah.
I think fair. I think so. Health insurance. Once again, be honest. Same situation again as with car insurance. It's tempting to just not put down some health problem you've had in the past. But then if you get another health problem later, and go there for cover, they might say, well, this is kind of related to this thing that happened before that you didn't tell us about. So once again, be honest. But moving on to keeping insurance costs down, I've got a few ideas on that.
Yes, please.
Yes. As we were talking before, if you reduce cover for the small stuff and only get cover for the big things that can go wrong, like getting high excesses on house and contents and car insurance. So I've got like $500 on, I think that's the highest I can get, but anyway, on car insurance and things like that, and you say, okay, my premiums are lower and I'll just have to wear it if I have a fairly minor crash. Yeah.
It's having a bit of faith in your own driving as well.
Well,
if you're a defensive driver.
Yes,
yeah.
That's true.
Mind you, I've seen you out on the road, Mary. A real yobbo.
Whoa, yeah.
She always does a burnout on the RNZ car park when she leaves on a Thursday afternoon. She's got a real reputation.
The smoke rising everywhere. Yes. Little old lady from Pasadena. Yeah. Now, where were we? Income protection insurance. You can pay a lot less if you have your payment starting after 3 months rather than after 1 month. Because, of course, a lot fewer people are going to claim.
It's a form of excess, isn't it?
Yes, it is. It is. It's the same sort of idea. With health insurance, drop the cover for GPs and have an excess in there. Yeah. And then it costs... health insurance does... what so many people my age are saying, the way the premiums rise awfully fast as you get older. And it's simply because we're all claiming more. Things start going wrong.
They do. Your body starts breaking down.
Oh, not for you yet, Jesse.
Oh, yeah.
It's already started.
Yeah.
So to keep the health insurance down, I would recommend dropping the GP cover and having high excesses. But I still think it's worth having the cover for if you get a serious health problem. The last thing you need is a financial problem at the same time, Yes. So workplace insurance for employees, have a good look at that. There's quite a lot of companies that offer plans, and they tend to be cheaper than getting it all on your own, partly because workers tend to be healthier than the average population because they're the ones that are in work,
Right.
and also you can get sort of big discounts because a company might line up 100 employees, and so that's often quite a good deal. On house insurance, if you get things like smoke and burglar alarms, quite often that will reduce as well as giving you extra cover, it'll reduce your insurance premiums on. Quite a lot of the insurance companies give you a discount if you get all of your house contents, car, etc., all with the one company.
Mm-hmm.
So that's worth looking into.
Can I just say too, I think there are
yes.
forms of health insurance or maybe even life insurance where if you meet certain health goals, 10,000 steps, there's all these things
yes,
it's kind of a new, and I think that's quite positive.
I don't know, is it happening in New Zealand?
It is, yeah.
Is it? Oh,
yeah.
Really? Oh, that is interesting. Yeah.
I won't name them, but you can shop around, and if you commit to 10,000 steps a day, or I don't know what the other ones are, basically looking after your own health a bit, then you get a discount.
And that'd be interesting because once again, they're not going to come and monitor you doing the steps.
No.
But if you get ill, they might look at the data that's coming in about your body and say there's no way you're doing 10,000 steps if your heart rate's this or your blood pressure's that or
maybe
or whatever.
Because I think you can get you get discounts on a little smart watch or something, so maybe they do track it in some way. Anyway,
oh yes, that's
chat for another time.
No claims discounts. So that's an interesting. On car insurance, for example, after 4 or 5 years, you can quite often, your premium might be halved if you haven't made any claims. And of course, and sometimes if it's not your fault, if you're in a crash but it's the other driver's fault, then they won't take away your no claims bonus. So one way to keep your insurance prices down is to drive carefully. And basically shopping around. Consumer New Zealand has got some good guidance on insurance companies, and they do things like survey members and say to them, which companies have you had a good or bad experience with, and so that gives you a good feel for. Because it's one thing having insurance, it's another thing seeing if the company actually pays when you want them to. And a final point, as your KiwiSaver balance is growing, you might consider reducing life insurance because if you die, let's say you die at 40, your KiwiSaver balance becomes available to your estate straight away. Well, it might take a couple of months to clear, but it doesn't have to wait until you would have been 65. And so if you've got, 100,000 in your KiwiSaver balance, then you might be able to weigh things up and say, look, if I die, my family can get access to that, and therefore I can reduce my insurance premiums. So that's one other thought.
Love that. Mary Holm, some great advice today. Thank you very much.
Pleasure, Jesse.
Mary Holm, our personal finance expert. If you came in late, we were talking about insurance and how much you need and what sorts. And you can find out this chat and previous chats with Mary Holm on our website on the podcasts page.